Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
Markets are bribing you to stay dumb and passive. S&P 500 just closed at 746, up 1%. But 40% of that index now lives in a tiny mafia of mega-cap tech. You're not diversified, you're a hostage. Nvidia rips another 3% day, marching toward becoming a single-stock economic policy, while the index marketers keep selling you the word broad. At the same time, in a world whining about food shortages and bird flu, vertical farming startups quietly raise billions while their public peers trade like trash. And that gap is your entire edge. Here's the first signal. The S&P is no longer the market. It's a tech ETF with a trust fund costume. 10 companies drag the whole thing around like a dog on a skateboard. You think you're buying 500 stocks. What you really buy is an Nvidia treasury sandwich with mayo of Apple and Microsoft. That's why the index is up even while half the names inside are limping or dead money. So when you say, I'm diversified, I own the S&P, you're basically saying, I only eat fries but from 5 different restaurants. Second signal, the world's freaking out about supply chains, war, bird flu, and food inflation. Yet vertical farming stocks are trading like failed diet plans. Look at the space. Companies doing indoor, controlled environment farming trade at tiny market caps, often less than their equipment cost. They burn cash, sure, but they sit on infrastructure that turns electricity and data into tomatoes, lettuce, herbs, and eventually, real cash flow when land and water go fully insane. In a world of droughts and viruses flying across continents, the asset that prints food inside a box starts looking less like a gimmick and more like a utility. Right now, markets price them like hype toys. The technology is already at boring infrastructure, but the multiples are still at failed SPAC. Third signal, governments and megacorps already told you the punchline. They're quietly subsidizing and locking up this stuff while retail chases shiny AI tickers. Middle East sovereign wealth funds invest in massive desert greenhouses. US and Asian giants fund indoor farms next to cities to dodge frail supply chains. Food retailers test in-store vertical farms to shave logistics risk and slap a local sticker for margin. Yet your average diversified investor holds zero exposure to any of this, just another dose of overfed tech. Here's the cliff. The next decade's inflation winner is not another chip designer, it's whoever owns the box that prints lettuce next to your city. So what do these 3 signals say when you smash them together? You're overexposed to the same 10 names as everyone else, and underexposed to the one thing nobody can live without: food that ignores weather, borders, and pandemics. You've been trained to worship low-fee index funds, while your real risk is concentration, not fees.
Does what you just heard shift something for you? That feeling, that need to know more, is exactly the right reaction. Most people never get there. You just did. Let's keep going.
Index marketing says safety in numbers. Reality says fragility when the top 10 names share the same macro story. Meanwhile, vertical farming is the opposite. Ugly charts, boring tickers, but their macro story is stupidly simple. Cities will pay for predictable food, and the cost of old-school farming climbs every year. The market narrative is backward. Everyone prices AI as unstoppable and food as permanent. In the real world, GPUs are abundant, stable climate and fresh water are not. Here's the mechanism in plain language. Vertical farming turns CapEx into a semi-fixed food printer. Upfront pain, then recurring output, tuned with software instead of prayer for rain. As energy grids modernize and renewables get cheaper, the biggest cost, power, trends down or stabilizes long-term. Once you build the box, every future tomato gets cheaper in real terms, while outdoor farming wrestles with drought, flood, disease, and logistics. That's not a meme. That's a leverage machine on basic calories. And because these businesses are early and messy, public markets throw tantrums, not analysis, which is where adults make money. So what do you actually do with this, without LARPing as a farmer? First, map your real risk. Look up your S&P or diversified ETF and check top 10 holdings and their total weight. If you're over 35 to 40% in the top 10, admit you're running a tech fund with training wheels. Second, learn the vertical farming ecosystem. Not to ape in, but but to understand the value chain: lighting manufacturers, greenhouse REITs, automation hardware, seed genetics, software that optimizes yields. The investable edge is often in picks and shovels, not the loudest farm brand. Third, build a tiny food tech hedge sleeve in your portfolio. A basket of controlled environment agriculture plays sized so that if they go to zero, your life doesn't change. But if they 5 to 10x as food gets repriced, they actually move the needle. You learned one thing today. Diversification isn't a number of stocks, it's a number of distinct survival bets, and you hold almost none on food. You saw one mechanism. Indoor farming converts energy and algorithms into calories, which becomes more valuable as the planet gets weirder. Your one action: audit your portfolio tonight and add one deliberate exposure to food technology, even if it's small, just enough to stop lying to yourself that the S&P has everything. This is not financial advice, but it is the truth. Index funds made you lazy. Food will make you rich or hungry. Choose which side you stand on before the next headline says crop failure instead of bird flu. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.